And notice that we're looking at our 3, 9, and this is a 19 exponential. You can experiment and use a 3, 9, 18. You can use a 3, 9 weighted 18. You can use a 5 and a 10 period moving average. You can use a 5, 10, 20. Many traders use various forms of moving averages. The bottom line, though, is if the market has been normally hugging its longer-term moving average, if it departs, if it gets too far from the moving average than normal, okay? See, normal would be a standard deviation of a certain degree, but if it gets out of that standard deviation, the market is either going to return to the moving average or pause, allowing the moving averages to catch up to prices. And then, from this point of crossover in moving averages, prices will reverse. Remember, I just talked about this. Trend, consolidation, reversal of trend. By the way, this is a daily chart. A daily chart. And what I've been showing you are different charts, different time periods, and different markets. This British pound trade here, notice the market then departs too far from its moving average. What happens? It pauses, comes back, tests or check or regresses to the means, and then chops around, and then again departs too far from the means, then it comes back, and then again it departs too far from the means, and then it'll come back or pause, allowing the moving average. So it is in these time periods that the trend condition you want to identify, has it gone too long and too far, and by using moving average, that can help you. Guess what? I use the 3-9 simple exponential moving average just as a tool to help identify those gaps. It also applies to the 3-period and 1-period pivot point averages. Now, the next chart is euro currency. Notice that the further away or the larger the gap is, the more room for a reversal. In other words, we see the market, the fair value is probably closer to the 9-period rather than the 19-period moving average. Notice that the market really accelerates and it returns back to the moving average. The moving average will act as support, and the market deviates, departs too far from the means. It leaves and that's what I'm trying to show you here in this example. It gaps. It leaves a gap, too much distance between price and the moving average. And every time we see that gap or that departure from the means, the market wants to return or regress back to the moving averages. So how is this helpful? Well, guess what? If we're looking at February, and of course these are daily charts, and March and April, guess what? We probably want to look in the 1st of March, sometime in this time period here. We want to look at what? Our monthly numbers. Imagine if we had a monthly R1 or an R2 number near this high. And if we belong here at this moving average, if we belong here, but we're way up there, we're probably going to look for a selling opportunity. And who knows, sometimes the market keeps going and keeps giving and keeps giving, and we're going to have to follow some trend trading techniques. But that's what I'm trying to explain to you. In a given time period, if the market in a given month, this is, for example, December, and we go through January, in a given month, if we're near our resistance numbers, or more importantly, near our monthly support numbers, we can box in what the true value of the market is, therefore giving us an added bonus market analysis of how to trade the market, either selling at projected resistance or buying at projected support if the market gets too far apart from the means. So when the market gaps too far from the moving averages, that's when you can use your monthly and weekly target numbers to help target a reversal point. And that moving average will act as what we call fair value gauge. Therefore, you can determine if the market is substantially overbought or oversold. So I wanted to go through the various means and methods that you can use and when to apply pivot point analysis. We've gone over a moving average approach. We've gone over how to select and filter out the numbers. We've gone over a gap band feature. We've gone over a conditional change feature. We've gone over how to identify if the market closes above the pivot point, how to identify if the market's in a bullish or bearish condition, and therefore how to filter or select the right pivot numbers. Now, that's the conclusion of part 1 of Forex Conquered Trading Course.